Funds are pouring into China's venture capital and startup sectors. Let's get more insight and analysis with Dan McClory. He's Managing Director and Head of China at Bonwick Capital Partners. Dan, always good to see you. Thanks for joining us.
Thank you, Michelle.
Dan, China's government-backed venture funds raised about $231 billion last year, tripling the amount under management in a single year. Dan, why is the government pushing the startup agenda so aggressively?
Well, this is a key tenet of Premier Li's program for innovation. And obviously rebalancing the Chinese economy, diversifying from heavy industries, state-owned industries, and really channeling support to innovation is extremely important for China right now. And there's all kinds of capacity to do so with the creativity and the ability to adapt and adopt many of the successful internet technologies coming out of other parts of the world in China today.
Well, Dan, China now has the biggest pot of money for startups in the world. A lot at play here. So where is this capital being deployed?
The lion's share of that capital, Michelle, is going towards internet-focused ventures. You have the examples of Baidu, Alibaba, Tencent, and there are so many entrepreneurs in China attempting in whatever way possible to emulate some of those titans of industry. So internet is more than half of the money right now. And when I say internet, I include e-commerce, mobile, online gaming, internet payments, a variety of subsectors of internet.
Well, you know, there's a lot of money and there are a lot of funds. There's 780 government guidance funds. You speak of internet projects. Are there enough quality projects to be invested in? And are there fund managers who know how to deploy and guide this capital?
I think there are enough projects, but like any fund manager, the Chinese fund managers will have to adopt the discipline and the discernment to pick the good projects from the bad. But in China, there's a very interesting phenomenon that compresses and really accelerates that process. And it's this mantra of fail fast. So go out, hit it really hard, see if there's traction, see if this idea, if this concept can catch on. If not, cast your net in a different direction. So we're seeing rates of introduction of new technologies, apps, all different kinds of internet ventures at an unprecedented pace, quite frankly. So I think the ability to be nimble and to redirect into various other areas when the initial business plan isn't working is absolutely critical, and having fund managers who can identify entrepreneurs who have that adaptability is really key.
Well, Dan, in terms of new concepts, some argue that Chinese entrepreneurs and startups are mainly just cloning Western startups and ideas. What do you say to that?
I think that might have been the case initially, and I think there were very many well-publicized initiatives that started in China that were inspired elsewhere. But I think today we're starting to see levels of original thought and original innovation that 3, 4, 5 years ago we might not have imagined. There are a couple companies on our radar right now that are of particular interest. And one company is a Chinese company that is fintech meets the contemporary art market. And they've created an online exchange where fractional interests in artwork can be sold, much like on a stock exchange. So an individual can buy a piece of a painting or a sculpture and actually own that and then trade that fractional interest. So that's one that I've not seen anything like that in the US thus far.
Dan, that's interesting stuff, and I'm sure there are a lot of good ideas amongst the deluge, but you have this huge flow of cash, you have so many students jumping into startups. How likely is a boom and bust cycle here?
It could very well take place. There are no guarantees in the startup and the entrepreneurial world. However, China has the ability to have learned from what other areas of the world have already done, and in some cases to perhaps not repeat those mistakes, but in other cases, because of this fail fast mantra, those same amounts of human capital and actual financial capital will get redeployed in other deals, much like has been the case in the US and Europe. And if you try something and you don't succeed, you try again and you eventually get it right.
Well, Dan, one sector that's raising a lot of interest is biotech. A lot of money being poured into giving China an original blockbuster drug. Pharma and biotech startups, as you know, eligible for tax incentives and products qualify for expedited regulatory approval. Is this the sector to look out for?
I think it could be. There are two particular areas that where China, because of the prevalence of various diseases, it might be diabetes, it might be tuberculosis, is really looking for an innovative model that's focused on the problems in China in those particular diseases, as opposed to importing something from the rest of the world in a sort of one-size-fits-all solution. We certainly see a lot of traditional Chinese medicine. We're working with a company that's getting ready to go public that has wearable medical devices that are infused with traditional Chinese medicine. So that's an example of China's homegrown approach to preventative as opposed to reactive care for various diseases and disorders.